And ahead of the G20 meeting in India's national capital, New Delhi, let's now take a look at the global economy with this roundup. Well, the U.S. employment market showed resilience as inflation slowed down, providing more evidence that the Federal Reserve can provide a gentle landing for the economy. The preferred underlying inflation indicator of the central bank, it showed the least consecutive rises since late 2020, leading to an increase in consumer expenditure. Employers created more jobs than expected in the month of August, and this is according to a separate study, although pay growth slowed down. Meanwhile, contrary to the forecast, inflation in the Euro region stopped easing last month. The European Central Bank has a difficult choice in deciding whether to postpone interest rate hikes or not. With a 5.3 year-over-year increase, the consumer price inflation remained more than 2.5 times over policymakers' target. And due to the high cost of energy in Germany, the firms are cutting down on new investments and looking to relocate manufacturing elsewhere. The energy transition is having a severe or extremely unfavorable impact on the competition of over half of the businesses examined. For the first time in at least 13 years, Britain's broad money supply has also stopped expanding, which will raise worries among people who have been asking the Bank of England to be cautious in its fight against inflation. And in Asia, an indicator of new orders rose in August, suggesting that the worst of the collapse in China's manufacturing industry may be over. The PMI data were encouraging for the manufacturing sector. Still, they showed alarming indications elsewhere, suggesting that the property crisis and sluggish consumer spending are continuing to weigh on the economy's recovery. Despite still high interest rates, India's economy excelled in its most recent report card, thanks to growth in services and a little uptick in manufacturing. Moving to other emerging markets, despite gains from increased commerce with the United States and a healthy domestic labor market, Mexico's economic growth in the second quarter was somewhat lower than the first prediction. The major slowdown in China's economy in recent months has sent off alarm bells throughout the globe, since it was expected to generate a third of global economic growth this year. So far, Asian and African economies have been hurt the hardest by the decline in trade. Well, the U.S. Department of Agriculture predictions for the 2023 harvest year predicts that the United States will ship around 23% of the world's maize, lagging well behind Brazil's almost 32% share.